Hi everyone, Darryl and Brian here from As Good as Gold Australia, of course, at the fabulous Sofitel here in Sydney. We are at the Golden Alternative Investments Conference, and I have to suggest to you now it's just been a fabulous couple of days. We've listened to some wonderful speakers, and speaking of speakers, we are fortunate enough right now to be sitting with one of the major keynote speakers at the event. I speak of Egon von Greyerz, of course, who is he is the founder and managing partner of Matterhorn Asset Management. Matterhorn Asset Management is the biggest and safest private vault service in the world. Quite significant to say the least. And so I'd like to welcome Egon here today. He's been very supportive of his time today and is sharing a few moments with us here today. Good morning, Egon.
Good morning, Darryl.
Good morning,
Brian. Great to be here. It's not often I'm in Sydney, so good to see you here.
Well, talking about not often here in Sydney, I believe it's been a very long time between drinks. It's something like 7 years now.
Correct. I picked the top last time. I was here at 12 and 11. And then I said, I'll never come back before gold makes new highs. So
oh, we're in for a treat.
So in Australian dollars, it has, so I'm all right to be back now.
No, look, I know it is a very long haul. I have done similar going in the other direction, and the older I got, the more I realised the longer it took to recover from these exercises.
That's true.
But yes. But look, I was intrigued by your presentation yesterday. You were the only man so far, the only person so far, that has experienced the whole auditorium standing on their feet and giving you a standing ovation. So that says something for your presentation the other day. But what I was intrigued by, and I've watched over the years, but so many people talk about 5-10% of your net worth in precious metals.
Yeah.
And you came up with a different figure the other day, and I'd like you to share that with the viewing audience today, because it was significantly different to the 5-10%. So if you could share those numbers with our audience, and then why you feel so strongly about that.
Yes, well, there was another speaker, Richard of the Perth Mint. I mean, he was saying 5-10% is the right amount or percentage in gold, and anyone who thinks of a high percentage live on a different planet. So, and I was speaking right after him, and I said, "Here I am. I'm on a different planet." And now, you know, we started already. I started actually with the business. First, it was just for personal reasons, myself and a few investors or business friends that I advised, and we went into gold in 2002 then in a major way, because I'm looking at it only from the point of view of risk. I'm not a gold bug as such. It was really to protect against the risks I saw in the world. And already at that time I said, you know, up to 50% of financial assets, which is very high and of course unconventional, but I'm never been a believer in conventional wisdom. And you know, the question was, if you put 50% or into gold, so I always, or whatever amount you put, you have to ask yourself, what do you do with the rest? And the way I look at risk then, and of course since 2002, debt has grown exponentially, basically trebled almost. It was just above 80 billion then, global debt, and it's now 260 billion or so. Therefore, risk is, if debt grows exponentially, you know, then risk grows even further than that, you know, super exponentially. And therefore, now we're at a risk. So therefore, if I said 50% then, I would be happy with a much higher percentage now. Personally, I would. I know that's unconventional. And I know that, as we both know, that only 0.5% of world financial assets are in gold today. But if I look at, so what else do I do with my money then? So I say, okay, so I put it into stocks. Well, to me, that's a massive bubble. Bubbles can always grow bigger, of course, and you know, as we know, all of these financial bubbles are fueled by governments and central banks printing unlimited amounts of money. So it's possible that they grow bigger. But we also have to look at, which I showed in the presentation, in real terms, all stock markets have gone down substantially this century against gold. And so therefore, stocks is to me high risk. Property market, you look at your own market here. To me, that's a massive risk, and it's going to be a lot of pain for a lot of people in Australia, I think, in coming years, sadly. And most people don't understand it. They don't realize what's going to happen to them, because properties always go up, stocks always go up, because that's what we've been taught, and that's what we have experienced in these last few decades, because we've had the most extraordinary times in governments just printing and printing and printing to buy votes, as I call it, or save the economy. They think they save the economy. Of course, they don't save it. They actually make it worse every time they print more, because the bubble just gets bigger. But now, so that's what being fueling all these asset values. And for that reason, to me, it was absolutely essential to have a protection, and the protection or the insurance, I call it life insurance, is to own physical gold and to store it outside the banking system. So, I mean, we did it for personal reasons, and then people asked, can you help us? And then we opened it up for the outside world in 2006 also. So we're based in Switzerland.
Just following up on your comments there, I know that you have a good relationship with Jim Rickards, and I do recall Jim speaking with you recently and referred to, even though he talks about 10%.
Yes, he does.
But he also said, hey, look, I consider that one should have maybe 30% in cash, which gives them flexibility, so that at any given point of time, if you feel as though the environment's right, you can upgrade your position in precious metals, and that might be 30%, 40%. So that sort of falls in line with what you're really talking about, doesn't it?
Yes, yeah, no, I always, so Jim believes in a bigger spread of various assets, and there's nothing wrong with that, because a lot of people have that. The way I analyze the world, that's not the right mix. But as I said, there are very few people who think like I do, because that's less.
Mike Maloney thinks the way you do. Exactly. Yeah. Michael says I'm all in.
Yeah. Because, and of course, I got also business in there, and I got personal assets in. I just feel comfortable with that, having control of my own insurance, if you want, because I think now we have a system which is so fragile that anything you have within the financial system you might never get hold of when you need it, and money is being debased all the time, as I showed yesterday. Just in this century, in real terms, i.e. measured against gold, all currencies are down about 80% since the beginning of this century. It's 2000. Nobody realizes that actually currencies, which is their purchasing power, has lost 80% in this century against gold. That's just unreal. And that, and still it's going to go a lot further in the next few years.
I had my mentor many years ago, Egon, say, why would you, and this is 40 years ago, fortunately for me, I learnt this lesson early, but he waved an American dollar in front of me and a 1 ounce silver coin and said, this very simply loses enormous value, the currency, over a long period of time. This, which is money, which is the silver coin, gains value against that currency in the same period of time. So what would you save in? So it seemed a logical answer for me.
Yeah, absolutely.
The money stood up.
Yeah.
Brian.
Yeah, I do have just a couple of questions, and they're probably a bit more simpler than what Darryl has been asking you. But I just want to take you back. In Australia, we've been in manufacturing for nearly 40 years as a company before we started with As Good as Gold. But the manufacturing sector in Australia has been totally decimated. We really, if you have a look at it today, we don't have one, whereas it used to be a booming sector going back 20 years ago. So it's been decimated, and mainly because of imports from China and Asia and places have become cheaper and cheaper. But I will produce, when I do my seminars with Darryl, not every seminar, but I discuss this format, and I actually prove that manufacturing in Australia could be well competitive under a gold standard. So my first small question here is, Has the importation of cheap goods into, has it affected Switzerland the same way has it affected Australia?
Well, you know, Switzerland is a very high cost of living country. If you've been there, you know what I mean. You know, compared to the rest of the world, I mean, it's everything is more expensive in Switzerland. I'm not talking about now hotels or restaurants in big cities, because they're expensive wherever you go today. But just normal products also are more expensive, you know, because I spend time in England also, and I spend time in Sweden, and obviously travel around Europe, and Switzerland is the most expensive. I mean, if you need to buy something, and if you have an option, or you don't buy it in Switzerland, basically. So Switzerland has still, you know, so they know that it's a high cost of production. At the same time, the Swiss are incredibly efficient. I mean, they're good engineers. So they know how they produce high value-added items, high-cost items. Of course, although they're big in the pharmaceutical industry, of course, which we know makes absolute fortunes for the simple reasons that these governments that pay for most of the products in the world, or insurance companies. So therefore, they make very good money, and they have also, you know, highly technical engineering products that they produce. So overall, you know, the Swiss economy has been fantastic. They have a very low debt. They virtually never make any deficits. So it's an extremely well-run country. And of course, governments has minimum interference, and most of the decision-making politically is done by the cantons, the local states, and they get most of the tax money also. And most people find that, you know, their government, they don't really care about the government because they interfere very little. You know, this is people power and this direct democracy.
Sounds like a good government. I think Australia should follow the same principle.
Well, I mean, I think, you know, I'm both Swiss and Swedish. I was born Swiss, and I was born in Sweden. But politically, and I lived in the UK, and I lived in a few other countries, but politically I think it's the best country in the world.
Fantastic. Must visit there more often. The last question, in your opinion, why does China import so much gold at the same time becoming so powerful with a fiat currency system? We know they're a great import. They produce a lot of gold and they import a lot of gold.
Yes.
But they've become powerful through a fiat currency system. So why are they importing this amount of gold, in your opinion?
It's so interesting that and when we heard at the conference yesterday also that all central banks have been buying gold recently. And it's true that central banks' total purchases of gold has increased in the last year, especially the last couple of years. But, you know, it's not around the world. It's mainly central banks in the East, because the Western European central banks haven't bought. U.S. central banks hasn't bought, or the Fed, and they might, you know, if they ever whatever gold they have is most certainly less than the 8,000 they state they have, of course, in the U.S. So, I mean, Poland's bought a little bit, Hungary's bought a little bit, but the countries that bought, as we know, is China, is India, is Russia, and is Turkey. So it is not quite true to say that central banks are buying more gold. I mean, you didn't say it, but a lot of it was in the press, and obviously the World Gold Council must have announced it that way, but it's a skewed picture. China, these countries in the East, they understand what's happening. They understand it. It's interesting. I wrote an article a year ago, whatever it was, when Nixon dropped the gold backing of the dollar. China already at that point had leading articles, which are in their daily newspapers, obviously, and anything and any editorials in the daily newspaper in China is obviously the government controlled and steered. So that basically said that what America is doing now, this is the end of the U.S., it's the end of the Western financial system. They saw it already then, in '71, the Chinese. They understand this, you know, and the Indians, of course, understand the value of gold. Russian see what's happening also. That's why they're accumulating. Not the people as much, because there's a high tax on gold in Russia, but the government has been accumulating massively. So they understand the value of gold, and they understand that gold is money and gold is power. And they also understand that the US is going bankrupt, and the best way for them being China, to accumulate power and to be the strongest country, both politically and militarily, eventually also, I'm sure, and economically, is to have the backing of the currency. Now, sure, they have also, their borrowings have gone up dramatically in this century, absolutely, from $2 trillion to $40 trillion, or whatever it is. So, and then you have the whole of the shadow banking system and a lot of wasted spending. So they will have their problems too, but their problems will be primarily domestic. They're not dependent on the whole financial system, because the money basically stays within the country. So therefore, they will solve it internally. And eventually, and I expect, as you have heard from me and when we talked before and my speech here, that I expect a major downturn in the world. But I think China will emerge first out of that downturn. The only thing that could actually change that is if there is a revolution in China, of course. Yeah. And if you get too many empty stomachs, that's what creates revolutions, if people become poor and they don't have food. But I'm sure that the Chinese will know that that's the first thing they will see to. And I would expect that China will obviously, as we've talked about for a long time, they will be the next superpower in the world. It's inevitable. Because as you know, talk about all the manufacturing has moved that way, and there's nothing left. There's nothing left here. There's nothing left in Europe, or nothing. I say nothing. A lot less in America. Same also. And manufacturing, that's a power base of any country. You can't just have nail bars and pizza deliveries and a few cryptocurrencies.
Darryl? Yeah. Look, wise words. Gold, for 5,000 years, Egon, has been the safe haven investment. It's considered, and you talk about this a lot, of course, as well, insurance. And it is all of that, but I see what intrigues me about gold, and we've heard this over the last couple of days, that average returns on gold, let's talk years ago, but just the last 20 years, have been around 9%. So pretty significant. And yet when we talk about investments, everyone talks about bonds and stocks. There's never a reference, or a reference, to gold. I find that intriguing, because a 9% return year on year is pretty significant. What do you think it is why is this? Why do people not recognize it more as a conventional investment? Why is it that only maybe 1% of the population have a genuine interest in precious metals?
Well, there are many reasons. First of all, governments don't like talking about gold, because gold reveals their deceitful actions in mismanaging the economy. Because as we discussed, since 1971, when Nixon took away the gold backing of the dollar, all currencies are down 97 to 99%. So governments are continuously destroying the value of paper money, and they don't want to advertise that by saying that, sorry, in real terms, all the money is worthless that we're printing and lending to all of you. And it's not only that you have to repay your personal debt, but you have to repay all over the government's debt also. Of course, nobody's going to repay it. We know that. And in the end, it will all implode. So governments don't like talking about gold because it shows that they are totally failing in what they're supposed to do. Yeah. And then banks, of course, for the simple reason that now banks are making a lot of money on producing various products. You know, they put together portfolios and products and packages and charge very high fees on that, and they churn that many times over. With gold, you know, why they're not interested in something that you just buy and sit on. They're not interested to protect the assets of their clients. They're interested in making money. You know, you know, if you ask a banker, I mean, all of these products that he puts in front of the clients, he doesn't buy any of them himself, of course.
Yeah.
Never dream of it.
Yeah.
And you should only go to an asset manager who has all the same things in his own portfolio that he tells you to buy. And then also, if you go to an asset manager, you shouldn't go to a banker. You shouldn't go to somebody who's employed, because if he was really successful in the advice he was giving, he wouldn't need to be employed. He would actually make so much money himself.
That's very true.
So therefore, gold is of no interest to them because they can't earn any commissions on it. And of course, gold, as you never make any headline. Gold is up, gold is down. I mean, it's only, it happened last time I was here. So hopefully it happened now again when I've been here again. In Australia, I'm talking about. Next time, now I'm starting again.
Influence
now
factor,
absolutely,
yeah, so.
that's why I came back. You know?
Make it go up.
Yeah.
Yeah.
So in 2011 and 12, I was here the last time. And of course, gold was on all the front pages then. And of course, the public love buying high and selling low. And you know, you should buy something when it's unloved and undervalued, not when everybody talks about it. If you want to buy at a low level. Gold is now as undervalued, measured in relation to money printing or to money issued, whether you take it worldwide or in the US. The amount of money in circulation today, or if you value gold in relation to the amount of money in circulation, gold is today as cheap as it was in 1970 when gold was $35, or in 2000 when it was $300, and today at $1,500. I'm talking about US dollars now, of course. And it's as cheap today as it was, 70, 2000 today. So measured against money supply. So gold today is extremely cheap again, and undervalued and unloved, and nobody talks about it. This is still, in spite of the fact that it has gone up in money, in paper money terms, gone up in Australian dollars is at new highs, of course. But nevertheless, gold is extremely cheap, so it's still not too late to buy gold.
Yeah.
It's actually at the very beginning. We are now starting another, in my view, that as I read it, another cycle. And remember, I'm not a gold bug. I only see gold as protection against a rotten world financially.
Well, yesterday probably would have been a better time to buy than today, because yesterday gold was $16 less and silver was about 50 cents less per ounce than what it is today. It's just a matter of interest. Do you think that movement may have had anything to do with the Fed's decision, New York Fed's decision to increase QE to 200 billion? They've just made the announcement to 200 billion a day.
I'm disappointed. I thought you were going to ask if it was because I was here. But
Well, I can do that too. I can reword it.
No, seriously, I'm not that big-headed. No, you see, gold has now, I mean, we had the strong phase from 2000 to 2011-12. We've had 7-8 year correction sideways. And in my view, when it broke in the US dollar terms, the 1350 level, which I call the Maginot line, or the defense line, now gold is again starting the next phase up. And so there is always some news that is in the papers blamed as gold went up because of this or that, or the Fed, whatever. There's always a catalyst, but the real reason is that gold is now started its next cycle up, and all the news that will come out now will fuel the gold price. Not all the time, because it never goes in a straight line, but basically gold is now in an uptrend. So whether it was the Fed that triggered it short term, but gold is going to go up long term now. We don't have to worry about, we never worry about, you said it was cheaper yesterday and today and all of that. If you buy gold for wealth preservation at these levels, it doesn't matter what you pay. Gold will be, number one, you need the insurance. Number two, we will see multiples of the gold price that we see today in the coming years.
Okay, well, we're going to wind this up now, because we know Egon, that you've got 1,000 people out there that would love to have a chat with you, and I can understand why. What we would like to do, of course, and we've spoken about this already, is have you come back. We don't want it to be a 7-year term between 7 years between drinks this time round. So we'd love to have you back at our convention next year.
Okay.
And we'll be talking about that, of course. But and
well, they got this 1 hour, super jet or whatever it's called.
Jets, yeah.
Then,
can't promise you that.
More feasible, right?
yeah.
Look, I thank you so much, Egon, for your contribution today. It's fabulous being able to speak with you and you allotting your time as you have today. Very much appreciated. And we look forward to your visit next year back to Australia. It would be fantastic.
Well, right.
Thank you so much. And once again, to our viewing audience, appreciate your support and look forward to catching up real soon. Thank you.
Thank you
very much.
Thank you.
Thanks, Egon.